me also welcome on board Rahul Chadha and figure out what he's making of the markets right now. Rahul, hi, morning, or shall I say evening? Are you in New York?
Yeah. So I'm joining this from New York. It's evening for me and morning for you all.
Yes, it is. And a party for you either which way, right? Because not just India is doing well, so are the US equity markets. But the one point being, Rahul, when do you think FII participation is meaningfully going to come back to India? Because once that comes in, then we're looking at, further upside from these levels and a lot of upside, I guess.
Yeah, so I think the state election verdict should give some comfort to the FIs. So look, from an institutional perspective, there was always the risk of downside in the markets because the valuations were not so cheap. And to be fair, there are parts of the economy which are a bit slow, consumption particularly. So the state election verdict was clearly very positive in favor of the ruling party, and that gives expectations that we'll have policy continuity post the general elections also. And I think what we see is over 6, 9 months, FIs would increase exposure to the large caps, particularly the banks.
Uh, Rahul, everybody is of the view that FIs will come back. What if they don't come back? I mean, there is no competition, they will come back.
Nico, it's a function of time. See, this is something we've discussed. What's happening also is globally there is a slowdown. So you've got to look at the numbers. US was the strongest economy, but fourth quarter is going to be slow here also. Sitting here in New York, you get a good feel of what's happening in the US. Travel, tourism, eating out is doing well. Healthcare is doing well. Outside that, things have slowed quite a bit here. Europe is in deep recession. China has slowed down considerably. So if you look at parts of the world, things are a bit slow. And again, with US 10-year yields at where it was 1.5% plus, that reduces the attractiveness for equities. What we saw in last 1 month was this relief rally because there was extreme pessimism and people thought that Fed would come and cut rates quickly. I think that is to be seen. How quickly does Fed cut rates, and what does it mean for markets in light of the growth slowdown?
Right. So, Rahul, what is it that you believe in particular, just keeping in mind the election outcome are likely to be some themes that would be beneficiaries in the coming months and the year ahead? Do you think that the capex related themes or perhaps those that are related to the PSU space are likely to be strong beneficiaries?
Absolutely. I think some of these themes, financials, capex related, would be themes one would look to buy. But I would rather say that rather than jump and buy now, I think over next 3, 4 months, one will get entry points because globally the backdrop doesn't look very strong from an economic perspective or from a market performance perspective. So if the global markets are subdued or are down, it's highly unlikely that Indian markets would significantly go up. What would happen is they would do their job by not falling. And I think that's where some of these sectors which have done very well, industrials, and the capex themes you talked about, real estate, will provide good entry points. I mean, the dips would not be significant, but look, 5-10% lower. Some of these names would be good long opportunities.
Rahul, do you think it makes sense to, let's say, rotate 15, 20, 25% from mid and small cap stocks to large cap stocks now?
Absolutely. I mean, no doubt about that. I think what's happened is a lot of retail frenzies happened in mid and small caps. This is the other thing, Nick, which we've discussed in the past. Investing is also about your downside protection. Look, the retail investors have made a lot more money than kind of a circumspect institutional investors like us. But what institutional investors do is do a bit of a downside protection also. So I think that is where it makes sense, having made so much money in these mid caps where valuations are expensive, growth is yet to rebound. It makes more sense to move to the large caps where the risk return is a lot more favorable and your downside is lower. Should globally there be an accident, look, you can protect your capital a lot more.
What, to your mind, will be the biggest moving part for 2024 apart from elections?
I think it is when the policy easing happen and more importantly when the economies respond. See, at the end of the day, it is the earnings which moves markets. Markets can preempt, anticipate, but if let's say the policy easing doesn't happen in which markets are expecting in June and Fed's holds on to the rates till the end of the year and growth keeps on slowing down, then it is likely that the markets are headed down before they move up. So I think what is important is when do you get the broad-based growth recovery, both globally and within sectors, within or across sectors, I would say, in India also.
So Rahul, if you have to construct an India portfolio fresh now for next 3 months, 3 years, how would you construct it?
Continue to like financials. See, financials being one third of our portfolio. So within financials, let's say 25% banks, put 5-6% of insurance. We've had 7% real estate. One can be tactical about real estate, cut that a little bit, and then if you get a correction over next 3-6 months, add to that. So between real estate, financials, and insurance is one third of the portfolio. Then would be industrial. So I think that is where one is looking at 10 to 12% goes to industrials, the infrastructure, the capex themes. Again, interesting bets would be metals. I mean, 6 months from now, I would be tempted to take a contrarian bet on metals. So look, we've seen these metal companies go for a significant capacity increase in India. Globally, also the sense is, look, if the economy is bottom and growth recovery improves, the realization should be higher for these companies. So those are names. Outside that, we've always liked the consumer discretionary plays, some of these select auto names or games, Zomato, etc. So that's been consumers been about 20-25% of our portfolios historically.
Okay, fair enough. And wonder if you have, given a relook to some of the inflationary concerns, particularly playing out for the rural theme as well. How do you look at a bounce back within that space?
I think inflation is going to ease out. Already data is coming that goods inflation is eased out. What you're seeing is because of the cuts done by OPEC, oil is at these levels. So else oil could have been 20-30% lower. But because of the global demand weakness, the goods inflation which was there in 2020, 21, etc., is now slowly going away. So I don't think inflation would be significant concern. And as inflation somewhere eases, the pressure on consumer wallet, which we saw over the last 2 years, is going to ease. And that's where you'll see the revival of consumption, particularly in the rural parts of the economy, or I would say the bottom section of the economy or the population.
Rahul Chadha, really appreciate your time. Thank you for joining us. By the way, what temperature is in New York now?
So we are at 5 degrees Celsius. I think it's going to snow in next coming days, but yeah, as we speak, it's somewhere around 5 degrees.
Manageable, actually. All right. Appreciate your time. Thank you very much for joining us.